Bitcoin is approaching all-time lows in historical volatility. How do you not go crazy while waiting for a black swan? Can the black swan strategy break? And a traditional breakdown of the options strategy for the week. Hello friends, this is the Optionomics channel. I'm your host, Roman Lisitovsky. And today, as usual, we will look at what opportunities there are for making money on Bitcoin options. And let's start by reviewing the previous trade. Bitcoin continues to trade in an incredibly narrow sideways range. That is, if we open the weekly chart, then I will also show you some data that I have specially selected for you. You can see that for 1, 2, 3, 4, 5 weeks, it's been a very narrow range. I mean, if previously the ranges, even when they were stagnant like this one here, had fairly strong wicks, but at the moment, there aren't even really any wicks appearing. And it turns out that a situation like this arises when there are some large buy and sell orders very close to each other. That is, it's obvious that someone here doesn't believe in growth and is slowly selling while someone else has already started buying here. And usually, it's quite difficult to determine which way the market will break because, in principle, there are two options. Either the buyer runs out of money or the seller does. And most often, when one side runs out of liquidity, the market breaks sharply in one direction or the other. I am still inclined to believe that there is a higher probability of moving somewhere into the 72 to 73 range. Just as this blue moving average catches up, we'll clear the overbought condition, and then I expect we can continue moving further. Although, since some analysts are now claiming that, in principle, Bitcoin won't go below 60, maybe we will indeed try to break through this corridor and go below these lows, which were in the area of, let's see, 50,000 for Bitcoin. Last week, accordingly, what did I have? I bought, it turns out, 67 strike call options and 56 strike put options. Last time, just like this time, I'm planning to take options more for growth. So it turns out that the 67s were quite close for me. At that moment, the market was roughly somewhere around here, and it turns out that the 67s were here, while the lower ones were quite far away. That is, there were the 56s, they aren't even visible on the screen right now because I was counting on the fact that a strong drop shouldn't happen, and in reality it didn't happen either. And so what exactly ended up happening with that trade? I bought 967 options at $70, and it turns out I also bought 956 options at $30. So, in total I spent $100 on the strangle. The size of the strangle, the width was $11,000, and $963 were invested, it turns out. So, for the week, I'm down $963. And look at what is happening at the moment. After a good trade, I have currently pulled back by about, well, somewhere around 8%. In principle, there is nothing terrible happening yet. So the trade was very good. And in principle, as I said, this one strategy, it most often looks like this. And actually, when I started increasing the risk here, the option prices were higher than they are now. And therefore, I believe that now is a much more interesting moment than it was back then, because back then, prices hadn't fallen quite as much, although at that point, they were already comparable to current prices. And look, today I already opened a trade, and today I will show why the Swan strategy is very stable, and in fact, if you get used to it, it is quite comfortable. The only thing is that it requires a lot of patience, that is, the ability to wait. And even now, you can already notice that in my previous series, I waited for 4 months. Right now, I am just waiting and watching the market closely. To be completely honest, the last profitable trade I actually made was back on May 31st. Well, I closed it somewhere around June 6th. And so from June 6th, today it's already August 8th to 9th. That is June, July, 2 months. So for 2 months now, I've been regularly giving a little bit back to the market. And here, in principle, you can see these kinds of gradual losses on the chart. Actually, the Black Swan strategy, if you don't want to have this kind of dreary slide every time, can certainly be diversified by, say, selling options. The second strategy that can diversify the Black Swan is a portfolio. That is, if, for example, you combine a Black Swan strategy with a cryptocurrency portfolio, then since Black Swans tend to happen on the downside more often, you might get a smoother chart. In other words, in a normal market, swans are not that frequent. And therefore, for example, if you overlay a Bitcoin growth chart onto this chart, you will notice that in those moments when serious black swans occur, the Black Swan strategy pulls the portfolio up. And at the moment when there is no strong volatility, but there is steady growth, well, by the way, this doesn't apply to the current moment, then it turns out the portfolio pulls ahead, while the Black Swan strategy slowly loses value. And that is why I actually recommend, if you have already decided to get quite serious about trading, to build up at least 2 or 3, and preferably 5 or 6 uncorrelated strategies. That is, for example, the Black Swan strategy combines quite well with portfolios. Also, if you have some skills in options, you can additionally engage in selling options as well. But here, of course, I would recommend, well, at least 2 or 3 years of experience in options to understand how to sell them. So it turns out that at the very moment, Bitcoin remains stuck in a relatively tight range. And now, as we always do, we will follow my traditional step-by-step plan. First, I am going to make a detailed market forecast. Then, based on that specific forecast, I will carefully choose the right options, a solid option strategy that I fully intend to trade. Finally, I will take the time to select the appropriate risk management parameters for the current week ahead. It's all about staying disciplined and sticking to the process. I actually opened the position yesterday, but in principle, the prices are still the same as they were, so it can be opened at this moment as well. So what do I think? I think that from this consolidation, there is a good probability of moving to the 71 to 72 range. That is, I will be looking at options, possibly somewhere above 68 to the upside. And below 59? Well, I'm keeping the bottom the same. Why? Because in my opinion, panic is always faster. And if Bitcoin for some reason flies downwards, then most likely it will be on some news that no one expected. And if it happens, then, well, it could very well be that in such a low liquidity and lazy market right now, well, I think the market could very easily drop 15 to 20% if something like that really comes along. Therefore, for the downside, I'll be taking it with a margin somewhere around 59. And on the upside, I expect it could go above 68. And based on this forecast, I will be building an options position. And later, I'll explain a bit more why I believe there is a good probability of breaking out of the range. And most importantly, why I believe that it's worth opening a position specifically to buy volatility. So look, let's start with the Velo website, as usual. That is, on the Velo website, it's clear that on the weekly implied volatility chart for BT coin, we are already approaching absolute historical lows. That is, this chart is from July 2021, and it's clear that right now we are very close to those lows that were, in fact, in July 2023 on the 31st. It was also summer, by the way. Notice how sharply the breakout from that volatility decline happened back then. That is, the market jumped immediately at that moment by, it turns out, 54%, which is about 1.7 times. And back then, I remind you, I think I already showed this in the previous video, the market moved by about 15 to 17% for Ethereum, and for Bitcoin, I think it was somewhere around 10 to 11%. And here we also see that it is very cheap. That is, option prices have become quite significantly cheaper. And that's why I believe that the risk-reward ratio, which I'll show later, is very good right now. Well, really very good. And we also looked at option prices on the delta skew chart, and it's clear that at the moment, roughly, well, there is still a little bit of fear. That is, put options are being bought a bit more. You can see here that there is a 10% premium, while call options are still quite cheap. That is, there hasn't really been any strong belief in growth yet. And that is another reason for me to look more closely at call options. And accordingly, what else I wanted to show you? I also continue to carefully monitor open interest. And here, too, you can see that if you take the aggregate chart of all open interest, we are still near this significant cluster at the 60,000 level on the downside. That is, a lot of puts have been bought here, and in my opinion, well, it's still too early to break through this level. And to the upside, in principle, there is at least room for movement, say, up to 70, and maybe even up to 80. Well, most likely, they will stop somewhere around here, say, from 70 to 75. But there is more room for movement in this direction for now. That is, this level is usually only broken through in the event of some very, very serious crises. Although, in principle, at the current moment, such a possibility exists, but that is precisely why one can buy some cheap put options, that is, really just in case of some serious force majeure. And also pay attention to the fact that it turns out that the market value of call options is $318 million and put options is 796. That is practically two and a third times more put options have been bought. And this also suggests that, well, in principle, for now, the fears are much stronger. Well, by the way, you can see that the put-call ratio is 0.37. And this is also a point where, well, usually when everyone is afraid, a strong movement does not happen. So that's regarding open interest. Let's take a look now. Greed and fear, I don't think, has changed much. Yes, that is, we are still in the fear zone, but actually we are approaching the neutral zone. And now for the most interesting part. That is, I want to show you my options table. I added two charts here. First of all, look, last week was another very narrow week. That is, we now have 1, 2, 3, 4, 5, 6 already. 6 very narrow weeks if we don't count Fridays at all. And just for interest's sake, I made two indicators. The first indicator shows the average absolute change from open to close in percent. And the second indicator shows the average change from the open to the absolute low or high. That is how much the market moved up or down. And here you can see that if you look from open to close, then, well, by the way, it's clear that Bitcoin is developing and the instrument is becoming less volatile. That is, in 2018, on average, Bitcoin could move by 20% in a week. Then in 2020, it dropped to 16. Then there was a peak of 14. And now you can see that the fluctuations are slowly dying down. That is, in 2022, its average fluctuations were up to the close. Yes, by the way, I should clarify that up to the close does not mean up to the high or the low. That is, if the market moved in the moment and then returned, that is exactly what we mean by the close. And here you can already see that here, in 2024, the average fluctuations became 7%. 7%. Well, in 2026, they also reached 7 at one point. Well, and the bottom, surprisingly, remains stable. That is, you see, in principle, the volatility does not drop below, say, 1 or 2% of fluctuations per week. Just recently, Bitcoin dropped to 1.7, right before that good trade I had. And now you can also see that it has dropped again. Right now, at this moment, it's approximately 1.98%. And the second chart I created is a chart of fluctuations from the opening to the extreme values. So why is this chart more interesting to me right now? Because if the market moves quite significantly in one direction during the week, then naturally I will close part of the profit on the options. And that's why it's important to me not that the market moves by a certain percentage at the close, but rather that if it swings by 15% within the week, that would be excellent. And notice that the chart here is much more optimistic. So here in 2018, for example, the maximum was 19%. Here in 2018, the maximum was 26%. Then, for example, from 2020 to 2022, it fluctuated between 21%, 19, Here, at the same time, it was already 16, 13. And by the way, later on, it was significantly lower. Then from 2022 to 2024, it averaged 10 here. While here, from 2022 to 2024, it comes out to 15, here 11. And you see that as before, when it comes to fluctuations to extreme values, Bitcoin can, in principle, quite easily move up to 10. And I remind you that this is an average value. That is, for example, one single week with a 22% move can easily make the 5-week average, say, 10%, even if the others moved, I don't know, 4 to 7%. And here you can clearly see that the open to close chart hasn't reached its minimum yet. That is, Bitcoin is still making small movements. If we take, it turns out these, well, accordingly, absolute changes without the tails. But as for the tails have become much smaller. That is, you see now the volatility of the tails is practically at absolute minimums. That is, it was lower only somewhere around August of 2023, and now we are also very close to that value. And now let's go ahead and take a closer look at the backtester data for options. And I will show you right now. Okay, I've already copied them. Now I'll add the backtester. So as it turns out, we are currently taking a look at our various options for the date of August 14th. Well, as I said, the green triangles are all at the top, meaning the backtested buys are showing some absolute records in terms of profitability. And look, this is what you can see even from the trade table. You can see that when a super strong move just happened, I was buying some completely unrealistic options. Like I took the 52s just in case it went somewhere. Then, for example, the 19th week, not the 19th week, but on June 19th, right in June, I bought the 59s to 68s. These options cost me $265 in total. The following week, I bought the 68s to 59s, which came out to $230, so there wasn't a significant drop. Next, I bought a wide range for the third, 64 to 50, and they cost me $150. Then the 67 to 56 was $135. And it turns out that by this moment, the option prices were already twice as cheap. That is, this is exactly the trend why, for example, I am not afraid to wait a long time for black swans. Because if they don't happen for a long time, the corridor becomes narrower and narrower and narrower. Or for example, cheaper and cheaper and cheaper. That is, back then I had to pay $265 for options with a size of, say, 9,000 plus or minus in both directions. Now, for example, today I already opened a position. I have the 68s and 59s, 68 calls and 59 puts, and I only paid $110 for them. I mean, even last week I had the 67s and 56s, it was $100, but the range between 67 and 56 was 11,000. Now the range is already 9, and the price is about the same, $110. And now let's take a closer look at exactly what the backtester is promising us for these specific option strategies. So to get a clear picture, we are going to add the 68 calls to our current portfolio, and then we will also go ahead and add the 59 puts to see how that combination performs under these historical market conditions. Okay, so for the quantity, let's go ahead and run a backtest with 10 units for each position, specifically targeting an entry point right around 23. This should give us a much clearer picture of how the model performs under those conditions. And notice how this chart consistently climbs higher and higher with each passing week, provided that good trades are being executed. This happens precisely because options become significantly cheaper over time, largely due to the steady effect of decaying volatility. It is a clear trend. And this is exactly the kind of thing that people usually find themselves lacking in, well, when they are investing in classic stocks. That is, you often want to buy low and then sell higher later. Well, for example, if you buy stocks, say, something like Tesla or let's say Nvidia, then if, for instance, the AI bubble bursts, you never know if it's the bottom or not. That is, even if there is some kind of super support, it can always break through it and get cheaper. With volatility, fortunately, that cannot happen. I mean, I've shown this many times before, but it was quite a while ago that if we look, for example, at the volatility chart for the S&P 500 index over its entire history, for instance, a monthly one, a year won't give us anything interesting. By the way, if you are looking back at the data from 1990, you can clearly see that market volatility simply cannot fall below certain specific limits. That is, even for the most liquid instrument in the world, volatility still spikes periodically. So if we look back to 1994, the minimum value recorded was 11, and then following that, it gradually fell to reach another minimum point in 2005. And finally, we saw those lows appearing again somewhere around the year 2012. And right now, well, by the way, right now for the S&P index, it's still far from the minimum, but you can still see that volatility is also decreasing. That is exactly why with Bitcoin, when I see this current implied volatility chart that I showed you on the Velo website, I really want to buy heavily at these levels because I understand that volatility usually shoots upward quickly and without limit, while on the downside, it always has some kind of limit. And right now we are at the lowest value, well, one of the lowest values in the last, it turns out, 5 years. So let's get back to the backtester. And accordingly to the question of how to wait for black swans, if, for example, you have a series of losing trades and you feel that you're running out of patience, it seems like they will never happen, the market will be stable forever, and so on. I usually always do a very simple thing. So for example, at the moment, I have opened this position, 1068 strike calls, 1069 strike puts, and I've entered it into the trade log. So I have two open positions here. I opened the calls at $85, and the puts I opened, it turns out, at 50, at $25. And look, so I'm looking at my chart, right? It's going down. And for example, that very move of 10% happens, say, upwards. So the market goes from 65 to 71,000. Then I just type it in here. So then these options of mine will increase in value to approximately 3,000. I type in 3,000 and realize that my potential profit on such a swan is 28,900 with a risk of, well, the risk is somewhere around $1,177. So when I consider this specific trade setup, if I take a moment to carefully examine my chart, I can see that the price action is positioned perfectly. Because of this, my chart is going to immediately start trending upward, and I am confident that it will reach some very significant highs in the near future. And even if, for example, there are still, say, how many 8 weeks? Well, that is one such trade brings about 28 X's, and even if the market stays flat for another 11 or 12 weeks. But here, by the way, it should be taken into account that in this case, the options will also become even cheaper, and therefore the movement will yield even more if it happens. So this kind of trade will easily cover about 28 weeks of waiting. So if you look at it in months, that's 7 months of waiting that such a trade can cover. If, for example, some more optimistic swan arrives, like the one that arrived twice this year on the downside, that is, if there is a drop of, say, 17 or 18%, then the 59th puts can be closed at approximately 6,000. And if such a swan arrives at 6,000, which, by the way, is also quite likely, then the trade could bring in, well, right away, then we could end the experiment. That is, the strategy will be, as they say, QAD. Then it will yield about 59 times the return. Actually, if we take a closer look at Bitcoin, specifically when we push our analysis to the absolute extremes, it is just to help us fully understand how much capital can actually flow into the market. Because these staggering numbers are always incredibly motivating, they really encourage you to stay patient and keep waiting for the long term. So if I get really sad and start wondering when the swan will finally arrive, having had so many weeks of losses, I come here and look at what those weeks actually looked like. For example, the ones that had more than a 15% move. And here I see that, first of all, there were quite a lot of them. So there were two. In 2026, they moved by 17, by 22%. There was one such week in 2025 with 17%. In 2024, there were three of them, 17, 16, 24. Then in 2023, by the way, 2023 was low volatility, and even within it, notice there was 1 week where Bitcoin grew by 27%. So if a 27% growth happens, then that is, you could say, a stroke of luck for a black swan hunter. So in this case, I usually always leave a small part of the position for exactly such a swan. So if, for example, Bitcoin moves 27% in a week, then it will rise to somewhere around 80,000, and then this option will be worth approximately 12. And then you see, you could get about 118 times the return. 118 times the return, that means you could, in principle, easily collect stop orders for 2 years and nothing terrible would happen to your deposit. And in this case, the chart will look just wonderful like this. And that is exactly how I usually manage to survive when there are long losing streaks. Well, naturally, I mentioned that there are other strategies involving selling options and so on, but for now, we won't be breaking those down. We'll stick to this weekly format. So friends, for next week, I've put together this position. That is, I have the 68 call options and the 59 put options. I took 10 of each. The risk is approximately it's 1% now, considering that the deposit has grown. And accordingly, if there is a movement of at least 7 or 8%, then that will already be some kind of profit. Well, upwards, it turns out, I need the market to move a little more than 5% from the current moment, and downwards, I need it to move a little more than 9.5%. And since I calculate that for now, the probability of an upward move is higher, I'm taking the upper edge of the strangle a bit closer. Well, accordingly, I plan to go into next week with this position. Thank you, friends, to everyone who watches my video and watches it to the end, and most importantly, to those who also have the patience to trade the Swan strategy. And I want to support everyone. I mean, I have a lot of experience trading with this strategy. The most important thing here is not to exceed the risks. That is, I always plan in such a way that I can calmly endure at least 50 to 60 losing trades. And just so you understand, for those who think this is very sad, in poker, some professional poker players prepare for 300 losing hands in a row. I mean, it's much harder for them, but the only plus they have is that they can lose those hands very quickly. So they don't have to wait for the right conditions. That can happen in, say, 2 or 3 weeks. And I think that sooner or later we will wait for our Swan. Also, I remind you that this video is not an individual investment recommendation. You make all trades at your own risk. As usual, I recommend not risking more than, say, 2 or 3% of your deposit on a single weekly trade. And accordingly, next week on Sunday, we will see each other in the next video on options, and I hope that this week we will manage to earn something. Thank you, friends. Roman Posudowski was with you. See you later. Bye.